Hey, listeners. So, I admit that thinking about money hasn't always been my strong suit, and maybe it's not yours. Maybe you're young and retirement's so far away you don't even want to think about it. Or maybe you're just one of those people like myself when you see tables and charts of numbers, your eyes just kind of glaze over and you just feel confused and you want to leave it up to someone else to figure out what's going on. Don't worry. Jeff Devens is here to help you with that. Jeff is not a certified financial planner yet. He's working on his credential, but he's a guy who's not afraid to ask questions. And so, since he was kind enough to come on the show and share some of the knowledge that he's gained through his research, I thought, you know what? I'm going to role model not being afraid of asking the questions and feeling like I don't have a lot of knowledge about this. And Jeff was wonderful to jump in and answer all my questions in an empathetic and patient way. So here's a little background about Jeff. For the past 26 years, Dr. Jeff Devens has worked in international education as a school psychologist, counselor, and classroom educator. He holds undergrad and grad degrees in psychology and social studies education, and he completed his Ph.D. in school psychology in 2006. In 2014, Jeff served as a member of a crisis response team supporting an international school that was going through two simultaneous crises. This experience profoundly impacted his understanding of finances and the necessity to support fellow educators as a form of psychological financial first aid. Jeff is currently in the process, as I said, of completing his certification from Boston University as a certified financial planner. Our guiding question for the episode was, what kinds of advice around taxation and retirement nest egg planning would you give to U.S. expats living overseas? Now, just a caveat here. Our chat was U.S. centric, looking at the American tax system and what U.S. international educators need to know to grow their nest egg, making the most of beneficial tax rules. And by the way, Jeff has provided a slideshow because he's done talks on this stuff. And the slideshow's linked to the show notes. And please use those visuals as you listen to the episode just to help you follow along, even though we don't quite go in the order of the slideshow. Jeff covered several areas of personal finance: factors affecting personal wealth accumulation, leveraging U.S. taxes, earned versus unearned income, Social Security, and Medicare. And because the episode is so dense with information, we've decided to break it into 3 bonus episodes that'll be sort of half hour each-ish in the length, just because we feel like this is so important. We want to make sure everybody can have time to listen, take notes, and think about each of these pieces. This episode was recorded on December 12th, 2022. Let's get into the nitty-gritty of U.S. finances.
Hello, Jeff. Welcome to the podcast. We're super excited that you're going to be with us for this episode. And let's start with, where in the world are you so that our audience can kind of picture where you are and how you're sharing with us.
All right. Well, thank you, David and Audrey. I'm in Singapore at present. This is the start of year 21 at the international school that I'm working at. Prior to this, Nanette and I, my wife, who's a high school choral director, we lived in Saudi Arabia for 2 years. And then before that, we were in Beijing, China for 4. And then before that, we were in the United States. And it's been a long, wonderful run, 26 years internationally. And we're looking at a few more before we decide to make the next move.
Well, excellent. And we were just sharing before we turned the recording on all the different people that we know. We always use that phrase. It's a big world, but it's really small when it comes to international teaching. So let's jump to sharing what we call a going global story. Do you have a story to share with our audience?
Yeah, I think it leads into the topic that we're going to be discussing today in terms of finance. So I want to go back to 2014. I was working at SAS at that time as a school psychologist, and I was part of a crisis response team. we were asked to travel to another international school in the region to help them with two simultaneous crises they were going through. Unfortunately, international schools are not immune to some of the same issues that we might see in the US with respect to safety concerns and child issues, and certainly this was the case. And so, as a team of 4 or 5 counselors and psychologists, our charge was to travel to this international school, and in a crisis response situation, which is what we were, a crisis response team, we're generally there for 48 to 72 hours to help teams of teachers and administration deal with the process of grief and trauma. And what's interesting about grief and trauma is each of us has a different way of processing it. Some of us become very emotional, some of us become very resolute, resolved to do something, to make something happen. Some of us regress in our behaviors. And what we wanted to try to do in that time that we were there was to help faculty recognize the different stages of grief and loss and emotional responses that we might have when it comes to experiencing trauma. And then from that larger group, we met with smaller groups of teachers that were more affected by the situation that was happening. And then out of that group, we meet with individual teachers. And anytime you go through a crisis response situation, you're generally trying to provide 3 different aspects for teachers. The first is safety and security. The second one is venting and validating, that is providing them an opportunity to be able to express what they're feeling without passing judgment on them. And then lastly, and the most important, I think, in this whole process is planning and preparing. So safety, security, vent, validate, plan, and prepare. And in those sessions of planning and preparing, I met with maybe 8 or 9 couples or individuals. And every one of those sessions that I had turned into finance. Now, remember, I was there to help with a crisis response situation, but the responses that I would hear back from the teachers were things like this: I'm trapped. I'm $50,000 in debt. I can't go anywhere. We have a mortgage and 2 kids in college. Or I've only saved $100,000. I can't leave the country. I've got so many bills that I have to pay. I haven't put any money away. Now, keep in mind, we were there because there was a crisis. But that crisis, what I didn't realize, was a lot deeper and more systemic than I had thought. And so after we talked about the process of what they might be able to do in each of those different situations, I boarded a plane with the team members. And I remember looking out that window, flying back to Singapore, thinking to myself, Jeff, you've got to get your house in order. You got to figure out what's going on financially. And so I fell into this bit of a wormhole for the past 8, 9 years, trying to better understand what happens around finance and how we can prepare ourselves as educators, international educators, for this next stage of life, which could be upwards of 30 years long. And in the process of doing this, I was incredibly fortunate to be working at a school where there was a fellow teacher at the time who was also involved in this process, someone you've interviewed, Andrew Hallam. And he and I became fast friends, and not just around finances, but because I could do more pull-ups than him. But that's for another story.
Yes.
The main thing that Andrew really helped me understand was the importance of how to invest. But as an American living abroad, there are a whole set of other circumstances that we have to entertain that most other nationalities don't have to, in terms of tax reporting, taxation issues each year. And so it really got me piqued and interested in trying to better understand how this whole process works. And the thing about educators, of course, we're teachers. We can learn this stuff, but the reality is very few people that I come across actually know this, that are in education. And so I began the process of trying to better understand this, and it's taken me on this bit of a journey that is actually psychological in nature. So even though I work as a counselor and a school psychologist, I'm finding that much of this finance conversation with colleagues has a heavy component to psychological wellness in addition to that. So I really feel like this has been a nice blessing and opportunity to be able to learn and share this information.
That's just so incredibly interesting to think of it from that perspective. You're totally right. It's very stressful to worry about finances all the time. And a
Absolutely.
lot of international teachers I've read about that haven't thought it through, because the international schools, and we've done as well an interview with Stephen Bush from TITAX, and he talked about how the schools used to provide retirement plans, and then the teachers kind of said, well, I don't necessarily want you to tell me what to do. Give me the money and I'll invest it. But then a lot of teachers didn't follow through on that and came up empty handed at the end of their 20, 30-year career and they hadn't really put away money for retirement. So that's a super familiar scenario that you're sharing there.
Yeah, absolutely, Audrey. I have, unfortunately, stories that I've heard that really have been a motivator for me, but a big concern as well. Just as a quick side, we'll get into some of this, but as a U.S. passport holder, we don't have a safety net waiting for us. That is, if we're not paying into the Social Security system, which many international posts don't afford or allow for, we have to deal with that on our own. In addition to that, there's no Medicare for us without these quarter credits that we have to earn.
Yeah, exactly.
Add to that, there's no pension. I was recently working with some teachers who have retired in the US and now are working abroad. Well, they have a guaranteed as a state pension can be, a source of income that is equivalent to, over the course of their lifetime, 20, 30 years yet to be lived, that's going to come out to several $1,000,000. And so the question is, what can we do to help empower, educate, and raise awareness for those that are in the international scene, as well as those who are considering this, to really think wholeheartedly about the wonderful opportunities, but also the responsibility that we have individually to better understand this process.
So, Jeff, our guiding question for this episode is what kinds of advice around taxation and retirement nest egg planning would you give to U.S. expats living overseas?
Great question. I wanted to say from the start that I'm an educator, and for educational purposes, I'm sharing this information. This isn't necessarily to be taken as investment advice. I really encourage folks to speak with their financial planner or their CPA on any of the concepts that we're going to be discussing. But I also want to say that we have a wonderful ability as educators to be able to do a lot of this research and work and figure things out. I remember when I first started learning these concepts, I was really intimidated by them. There's language that's used in the financial industry that makes us feel, quite frankly, ignorant without knowledge and understanding. And you see someone who comes in with a nice tie or is dressed up nicely and they've got a flashy folder and they start talking to you about bonds and stocks and investment advice and different expense ratios. And they use this language that we just nod our heads to as if we understand what's going on. But if we're being honest, we really don't know any of this. Well, because of that experience in Jakarta, I made the decision that I don't care how foolish I look. I don't care how stupid I might sound in terms of the question I'm asking. I'm going to ask the question because I want to learn this. I want to be able to share this and I want to be able to help other people so that folks are not in similar situations, and perhaps selfishly and more importantly, so that I'm not in this situation down the road.
Right.
So as we get into some of this terminology, if these are terms that you may be unfamiliar with, don't let that offend you in terms of being turned off from this. I would just really want to encourage you to go online, have conversations with people, and ask the ignorant questions. We can learn. And I'll just say this before I jump into this. Feeling uncertain, feeling afraid, feeling unsure, this is what it's like for our kids when it comes to them learning and trying new things, right?
Mm-hmm.
So it's about reminding ourselves again what our kids are sometimes going through in the process of learning, and that we're all on this journey together. So
I really appreciate that. And I just want to explain to our listeners first of all, Jeff is using a presentation, and we have posted this presentation on our website, and that will be linked in the show notes. So please open the presentation. Feel free to follow along with the presentation so that you can have some visuals with it. Also, this is going to be kind of an unusual interview for us where we're not necessarily asking questions and then Jeff is answering them. He's going to be presenting, and then David and I are going to jump in as we have questions. So, just so everybody understands the flow, today is going to be a little different from the usual. So, thanks, Jeff.
yeah, no worries, no worries. And again, please feel free to interject anytime you want in terms of asking those questions. It's really, really helpful. When we think about some of these factors that certainly affect our finances, one of the many things we think about are things like how much are you contributing each year and whether or not the interest rate is going to be high enough to surpass or keep up with inflation. And these are certainly important concepts along with dividends. And what are those? A payment from a stock or an index fund that you might receive quarterly as a part of owning that particular investment. Interest rates, what is it that you're receiving on that particular investment quarterly, yearly? the different fees that are associated with that particular product. And as Andrew talked about those fees and how tricky they are to decipher. And I can attest that even at the school that I'm presently at, you almost need a master's degree in finance to read through some of the language.
Mm.
And here's the conclusion that I've come to, folks. It's by design to make it confusing. It's by design to use percentages and decimal points and speak in sort of this coded language. So part of the work that I'm trying to do is just make it easy speak or decipher it. And I'm struggling with this at times along the way to learn this as well. But the fees that you pay are going to have a big impact on the outcome of your investment. Certainly the taxes that you pay as well play a big, big role in this. Sometimes the question's asked, do I have to file taxes? The answer is unequivocally yes. If you make more than the standard deduction and earned income, you're required to file taxes. And we'll talk about that standard deduction in just a bit. If your self-employed income exceeds $400 US, you're required to file taxes. So you have to do this as part of our obligation as being an American citizen. And so there are some really unique tax pieces that are associated with being an American that others don't have to take into consideration. And so what we want to think about with our investments are different kinds of taxation vehicles. What I mean by that is some of the taxation vehicles, if we invest in them, we never have to pay taxes on that money that has appreciated and grown. Those are typically considered a Roth account. You might think of it as like a Roth IRA or a Roth 401k. When you hear the word IRA, that means an individual retirement account. This is something that you individually set up separate from the company that you're working with, whereas a 401k is an employer-sponsored plan. Some of you in the US that may be listening to this thinking of coming overseas, you may have a 403b plan or a 457 plan. These are basically employee-sponsored plans where you're going into partnership with the federal government perhaps for a while, and they may defer the paying of taxes on this investment until you reach retirement or until you start to draw those funds out. So I want to make some distinctions about those taxable accounts versus tax deferred accounts versus tax free accounts. So there's a couple different buckets there.
So I have a question about Roth. I'm going to be the brave person who says I don't understand.
All right.
I was under the impression that you couldn't get a Roth if you are not living in the US.
Great question, Audrey. I appreciate you asking that. So here's how this process works as I understand it as well. If an overseas American uses the foreign earned income exclusion, which is an exclusion that allows you to effectively exclude a large portion, and in many cases, all of your foreign earned income, and you don't have any additional income beyond that exclusion, then you would not be able to contribute to a Roth IRA. So effectively what you have to have is a situation, and I'll give you an example of what I mean by this in just a second. You have to have a situation where you actually make more than the foreign earned income exclusion. So for 2022, the foreign earned income exclusion is $112,000. So let's say, for example, you're living in Saudi like we were many years ago, where we earned a salary of maybe $45,000 each, married filing jointly. So together that's $90,000. Well, because our combined income is not above that foreign earned income exclusion. In fact, each of us have our own foreign earned income exclusion.
Exactly.
Because our income isn't above that, we don't have any income to be able to contribute to a Roth IRA. And in order to contribute to a Roth IRA, you have to have what's considered earned income. Now, here's a situation where you could do that. Let's say, for example, you make $120,000 in foreign earned income. Well, your $112,000 foreign earned exclusion will cancel out $112,000 of that $120,000. The $8,000 remaining is taxable income. However, here's where it gets great. There's so many different levers that expats have to be able to utilize. You have a standard deduction. And that standard deduction for married couple filing jointly for 2023 is $27,700. That standard deduction will wipe out that $8,000 tax liability. But because you created a tax liability, that is considered an earned income event. And that allows you to be able to contribute to a Roth IRA. So there's lots of little hacks that you have to be able to use. And there are other nuances as well. For example, there are income limits in order to be able to contribute to a Roth IRA, but there's a process to get around that legally. It's called a backdoor Roth. Effectively, what that means is you have to contribute money to an after-tax IRA, and then once the money is settled into that account, then you move it into the Roth IRA. For those of you that are listening, I'm watching Audrey here as I'm explaining this. Her eyes just rolled. What just happened? What just happened?
I'm trying to take it on board. So then the part that I'm confused on, as an overseas teacher, because you move around and you end up, your salary goes down, typically because a school will only give you a certain number of years of experience on their, so you go down steps and things like that. I've never earned close to $112,000, so I'm confused how I could earn more than $112,000 as foreign earned income.
So some schools, like the one that I presently work at, they provide a stipend for housing. They provide additional income for flights to be able to repatriate. When those pieces are added into your salary, then a person can find themselves in a situation where even though they may not earn, that is their job, working, making $112,000, in some parts of the world, particularly here in Southeast Asia, your salary can be above that $112,000 exclusion, which brings into play actual other exclusions that you could possibly use as well. You see, here's the thing that happens with most expats. When you come overseas, after your first year, you're going to be considered, living abroad full time, and you will qualify for the foreign earned income exclusion, which will allow you to exclude, again, for 2022, it's $112,000. Next year, 2023, it's $120,000 of income that can be excluded. And so you're going to walk away after you pay your tax provider, or if you do it yourself, you'll find that, hey, I don't have any taxes. It's great. You'll be whistling. I don't have to pay any American taxes. I don't have to pay any American taxes. The problem with that is many expat Americans are leaving thousands of dollars on the table because they don't realize that there are other things within the tax code that they can use, like tax credits, to be able to access additional credits for investing purposes. And I'll get into that in just a little bit. But let me back up and talk a little bit more about some of these other exclusions that are available to expats. When we lived in Saudi Arabia, if you remember, Audrey, they just provided us, and David, they just provided us with housing. I don't remember a statement indicating that we had to record how much our monthly housing was. In fact, some of the schools that you attend, they won't provide a document for you. It's just kind of word of mouth. You'll go back home to your tax provider and you'll say, well, I made this much this year. Well, where's that at? I don't know. You want me to type something up and give it to you? They don't necessarily provide official tax forms. But those that do, you would bring that back to your financial planner or CPA or your tax planner, and they would take care of that for you. And they would normally use the foreign earned income exclusion, and that would be the end of it. And you'd walk away with no taxes. Other levers for those that make above that foreign earned income exclusion that they can pull on are things like the foreign housing exclusion. So the foreign housing exclusion will allow you to exempt a portion of the money that you're given for your foreign housing exclusion as well. So for last year, for example, $35,000, $38,000 of our income, earned income, we were able to exclude that for tax purposes with the foreign housing exclusion. But in addition to that, if you pay taxes in a foreign country, you could potentially use a portion of the taxes that you paid in that country to offset U.S. income, and that's called the foreign tax credit. And so each of these different credits and deductions and exclusions are part of the levers that Americans can pull to be in a situation where they don't have to pay taxes, even though they have to file taxes. And so it's really important to understand some of these different levers, like the standard deduction, like the child dependent care credit, the child tax credits. These are different kinds of credits that we can utilize to be able to offset some of the taxes for some of the strategies that we can incorporate. I've used a lot of language right now that might give people pause to kind of, I don't know what these terms mean. You don't necessarily, what I'm finding is you don't necessarily have to know all of these terms as much as having a script to provide to your CPA to help them understand what it is that you're trying to do. What I want you to understand before I take a breath here is your CPA's job is to get you to zero taxes. Ideally, look for every strategy they possibly can. But when we think about what we're trying to do as expats, it's not to get to zero taxes. It's to maximize every tax advantaged account strategy that we can utilize and get our taxes as close to zero as possible. So it's working in conjunction with those pieces.
Okay, while you take your breath, my next question is if a person has not been filing in that way, is it possible to go back and retroactively make changes on things?
You are allowed to make some changes to your taxes, amending them, but you can't do that for things like credits. You can't do that for things like taxes advantage things that you could have done in terms of strategies. Once that tax window closes at the end of December, effectively that tax window is closed unless you have underpaid your taxes. Of course, the IRS will want to receive that payment. But if you've also overpaid your taxes and you're able to support that, you can get a reimbursement for that. But these credits, most of them are use it or lose it. That is, you have to use it within that year. So let me give you another example of this. So the child tax credit is a credit for children under the age of 17 that's worth up to $2,000 per child. So potentially that's a $4,000 credit that can be utilized. But you see, when you take the foreign earned income exclusion, that $112,000, and if you take, for example, the foreign housing exclusion or some of these foreign tax credits, your income may drop to zero. And your CPA may say, well, I didn't apply these credits because I didn't know you were going to, there's nothing in your tax document that suggests to me you were going to need these.
Right.
So why would I apply for them? Because if you use the foreign earned income exclusion, these credits are non-refundable. If you live in the US for 6 months or longer, a portion of these child tax credits may be refundable to you. But if you live abroad, the child tax credit is non-refundable. But you can still get and utilize the credit if there is enough information in your taxes to suggest that's merited. And where that information is going to come for most Americans is inside of their brokerage account. And that's what I want to talk about next, to try to help people understand this brokerage account and how it can work for many of these expat Americans.
Thank you for explaining all those nuances. I'm feeling sad that I wasn't aware of this stuff, 30 years ago, but appreciate that you're teaching people about it for moving forward. David, I'm wondering if you have any questions. I feel like I'm hogging the mic here.
You're asking terrific questions. And that covering of the tax area with some depth, I think, is going to be very helpful for our listeners. We got some of this with Andrew and Stephen. What I'm excited about now is the next part, where Jeff's going to talk about you're earning interest, you're earning dividends, you've maybe got some capital gains. How can you take advantage of that and using some of the levers that you're talking about? So let's go for that. We're stopping the episode here to allow listeners to digest and reflect upon the material shared so far. Part 2 of this 3-part bonus interview will pick up with Jeff diving into investing and using levers available in the U.S. tax system to support one's long-term retirement planning. Don't forget to check out Jeff's slideshow, which is linked in the show notes, to further your understanding of the topics covered in this episode. Thank you for joining us today on Educators Going Global.
You can find this podcast on Apple Podcasts, Spotify, Google Podcasts, and all the other usual suspects.
Please subscribe, like us, and leave a review on Apple and Spotify, and let your teaching friends know about us so we can grow our community.
Please reach out at educatorsgoingglobal@gmail.com and join our Facebook group, Educators Going Global, if you have ideas, comments, or wish to share a Going Global story of your own.
You can also find us on Instagram at Educators Going Global.
Please visit our website as well. www.educatorsgoingglobal.com. All our podcast episodes are on there by topic, along with blog posts, Going Global stories, and our ever-growing resource library. For now, this is Audrey.
And David.
Inviting you to travel,
Teach.
and connect with us.